day all. Ira Epstein of Linn Associates with your agriculture wrap-up for this Tuesday, January 15th, 2020, and we're about 2:15 p.m. Central Time. Well, the event did occur today. In fact, events occurred. We did get the signing of the U.S.-Chinese trade deal. I have not read the 86 pages to tell you that I know enough to talk about it in an intelligent way just yet, but I know what I was expecting. Some of the buy the rumor, sell the fact that you had to be a bit careful about, and that occurred today. Cotton down 100 points. I thought that would be one of the markets that really benefited from the deal. If you come over here and we look at wheat, that was the market up, and we thought that would be a beneficiary. Corn down, but look at the beans. They got smashed, down 13.5. You were down in the meal market, $1.90, and oil. One of the items we keep hearing that the Chinese really need is palm oil and things of that nature, down 77 points. So I'm still of the opinion it's to buy the rumor, sell the fact. Now, at 2 o'clock today, Liz Claman, who I'm on her show a lot, was just at the White House with Larry Kudlow, and he was talking that he's been empowered to work on liquid natural gas to get that sent over to China. Okay, and that happened at the luncheon after the signing today. Well, you're down 6 points on that. I'm laughing because it makes so much sense to me. The stock market, they keep touting, oh, the market's up, it's all record highs again. If it's a clean sweep, don't be surprised that that ends up lower. So let's go to the grain market and see what we've got. For the week, with the signing today, down 6 points. Now, Larry Kudlow did say, as I said just moments ago, and that's why I waited, I wanted to hear his interview, that he expects the USMCA deal to be voted on as early as tomorrow or Friday. That would be good news because, frankly, Mexico and Canada are much bigger trade partners of ours than China is. But you can see this market's been having trouble in that high 939 closing area. When we look at the March soybeans, yesterday, if you go to my video, I said, got to be careful right here. I said, some traders might say this is a head, a shoulder, and another shoulder. Very possible. And what you don't want to do is see this market get under that 935 area, basically. Look what happened today. So now you're reaching down. I did what's called a count. And let me explain that to you to help you out. You take the lowest area here to the highest area. I came up with about 28 cents. You take that and you figure out where the market might go from this breakout, and I came into the 905, 910 zone, just so you'll know. So that's one way to measure where a counterforce of this formation might go. Am I huge on these formations? Flat no. Do I know them? Absolutely. Do I pay attention to them? Yep. But what I like are the tools that I show you more than that. And that is the swing line. First off, this is a chart without the swing line. This is it with it. Let's take today's action off it. Coming into today, yesterday I would have said we have lower highs, lower lows. The market's in a downtrend. You followed through with that today. Then we'd have put on moving averages. Let's again take this off. The market was yesterday back and forth against this 18-day average of closes. If it would break, there's a possibility. The first number supported the 100-day moving average of closes in the green. That's where the market seems to be making a run to. I'd also put the Bollinger Bands on. And it's the combination of the lower Bollinger Band, and again, I'll remove this so you're consistent. I'd be looking at that area as a possible support zone. Bingo. Now, if that gives ground, that opens up the door, as I said, possibly. You're always guessing on a chart, to the 910 area. I wouldn't be surprised if that happens. But momentum is already oversold. So momentum oversold means I don't think you're going to get a lot of traders necessarily just selling into the hole other than those that might be caught the long side. And so often you get these deals, the newer type traders buying into it, oh, this is going to be great, this is going to be whatever, and they wonder what the heck happened. And I'm going to repeat, buy the rumor, sell the fact. That's a mentality that's been around as long as I've been trading, and it seems to be at work today. Now the question is, what next? When we come to the meal market, not a trend. You're caught between the lower Bollinger Band, this black dashed line, and the upper band. That seems to be where you're at, and not trending. You have a lower low, higher high. Momentum oversold. Soy oil. This market has collapsed, but now you're down to that first challenge of the lower Bollinger Band. Now you hit it yesterday at 33.51, got through it. Today you're slightly under that again. We'll see if the market gets its bounce here. Wouldn't surprise me if it did. In the corn market, the market pulled back to the combination of support at the 100 and the 18-day average of closes. You're not trending. You have a market with a lower low, a higher high, caught in this new narrow Bollinger Band where the market's trying to figure out, is this a good thing for what's going on with U.S. agriculture trade? It's already built into prices right here. And I'm going to give you the secret. Now the market's going to look over the horizon. I know it's only January 15th. They'll start talking planning intentions before you know what's going on. I know you think, what's he talking about? Been down this road a lot of times. In the wheat market, wheat's acting like it is impervious to the other parts. Yes, it's over the upper Bollinger Band. Yes, the market, if you look at the close at 573 and a quarter, managed to respect that band and went right back to it, couldn't stay over it. It is overbought, it is in an uptrend, and it's got support back in the combination of the 18-day average and this low of 558 and a half. Sugar market. The sugar market today finished at 14.52, again over the upper band. So you've got today over the band. Now yesterday's settlement at 14.32 was over the Bollinger Band of 14.19. That's 2 days in a row over. The day after, or before that, was 14.16 over that number, 3 days in a row over. And on this day you settled 14.07, which was over the 13.90. So you got 4 days in a row over the upper Bollinger Band. First, that's a good sign of strength. We had talked that the market was breaking out when it came out of this pattern, and when it breaks out a market out of a sideways pattern, inevitably, if it's the upsize, what I often see, it just gets overbought and stays that way for a bit, and that's what this market did. This is a sign of strength, not weakness, but tomorrow, the odds of staying over the black band, wherever it ends up on that formula, 99% that it will not. My rule of thumb, each consecutive day, I take away one of those percentage points. Does that mean I'm a bear? No. I just said it's a sign of strength that you did that. I think the pros will be looking to see, do you embed or not? You're overbought right now. And how deep can you break under that band? In the coffee market, you finally got a bounce away from the band. And yes, I think the pros were selling that bounce. It's the first day where they've had a reasonable number away from the band to get short. And I still think they're in the short side. How long it'll go, don't know. But this is a sign of real weakness. We had talked yesterday about the possibility of getting to the 100-day average and the lower Bollinger Band together. That comes in between 1153 and 1196. Cocoa market, like the sugar, trying to hang in here over that band. It's not the sideways action of sugar. It's overbought. I think the sugar is a stronger chart than this. In the cotton market, problem, you lost the embedded reading today. Now, if we come to yesterday, you still had the numbers over that. In my written updates, I had told clients, be careful of everything today. You don't know what the reaction's going to be. This is a market that ran up in anticipation of the signing of this deal. Now it's lost the embedded reading. The only time you can get it back is the day after it's lost. If it stays lost, often, price will make a run at the 18-day average of closes. We'll see how that plays out for tomorrow. Cattle market. More of this churning sideways action. This is just, as I said to you day after day, think of a pipe, and the pipe is the black dashed lines. The spring in the pipe we're winding up, which is price. It's going to break out of here one way or the other. The question is, which way? Some traders will step back into maybe the June cattle. Others, they might buy straddles in this, buy a put, buy a call, and you got your fingers crossed. Give me a big move one way or the other. Don't know. Feeder cattle failed. Lower highs, lower lows, but the settlement at 145.17 is over the 18-day average, so it keeps, if you will, the bias up. Had that not occurred, that with the lower close, I'd be in an all-out bear camp because momentum's turning down, but it didn't, so I'm on the neutral camp. In the hog market, so where's all that pork purchase? Down today again, not much, just about 2 points. You have a lot of divergence. You've got momentum correcting an oversold condition. You're out of a trend and you have downside bias. Rough market. Another market that's been interesting that I'm looking at is gasoline. And I think gasoline should be looked at. And I'm putting that report here for you because it has to do obviously with ethanol, what's going to happen with corn crops, all this part of the market. We're into the churn factor. That churn's important because we have some price counts that had been met. Now the market's backing off. I show you in this video report, and it is a video report, what I think of the weekly chart, the seasonals, the price counts, and then I walk you right through all the daily charts, showing you where I think that market and seasonals might come together. If you want to see the report, go to our website, www.iraepstein.com. Under the word research, you'll see a drop-down menu. You can also get to it by clicking right here. It'll take you right to where you have to be. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.